Welcome to Fall into ETF Investing. On today's special episode, our panel of guest speakers will be discussing investing in artificial intelligence, boom or bust.
Welcome to ETF Market Insights. I'm Erin Allen, and this is Danielle Nezel, and we're your hosts of ETF Market Insights. And today we're really excited to be kicking off our special edition Fall into ETF Investing.
Erin and I, we are out of our home offices. We're right here in studio together. We're also talking with experts in the industry. We're bringing everyone together to bring you, the do-it-yourself investor, a fantastic educational experience. Here at ETF Market Insights, we're all about providing DIY investors the tools they need to navigate these markets and manage their own investment portfolios.
Just a reminder before we do get started that we're not providing you investment advice or investment recommendations today. As Danielle mentioned, our show is all about providing education for DIY investors.
Our next session is all about investing in the next big growth trend in the stock market, artificial intelligence. This has been a huge buzzword for investors, but we're going to break down, is this going to be the next investing boom or will it be an investing bust?
Very exciting today. Danielle is actually going to be joining the panel, so looking forward to that. I'm going to turn it over to our special guest host for today, Marissa Roberto. Marissa, you may recognize from TSN. She talks a lot about sports and gaming. She's also an avid ETF investor. So Marissa, take it away.
Welcome to ETF Market Insights. I'm Marissa Roberto, and usually I'm covering sports and esports for TSN, but I am excited today to get to shift my focus to covering the world of ETFs and capital markets. There are a bunch of similarities covering sports and the stock market. We've got winners and losers, investors making bets on who the next winners will be, and a lot of predicting going on, like which players will become the next big story rather than the next big bust. Today, we're going to explore if investing in artificial intelligence is going to be the next winner from an investment perspective, because AI is transforming the way we work, our social habits, and how we interact with the world. But will it transform the investment arena? With me today, we have Danielle Nezel from BMO ETFs and Ran Leggy from ARK Invest to help us understand and answer the question, will AI become the tech industry's next big boom or next big bust? First of all, welcome, both of you.
Great to be here. Thanks,
Great
Marissa.
to be here. Yeah.
So excited to be here and doing this with you both. Ran, can I call you Renato?
You may.
Nice. Love this for us. Your team recently published a research report about investment opportunities in AI. Your opening statement is this: artificial intelligence is reshaping industries, and we believe it could be a long-term growth driver more impactful than the internet. Pardon me? What? How? I want to start here because that's a huge statement to make. Explain yourself.
Absolutely. So we think it could be magnitudes larger than the internet. If you think about the internet, over the last 20 years, it's created roughly $20 trillion worth of market cap and appreciation. We think AI will create $100 trillion over the next less than 7 years. So by 2030, we think the enterprise value and market cap associated with AI companies could exceed $100 trillion.
You're scaring me a little bit. It's a little exciting. Those numbers are huge.
There will be winners and there will be losers. So it's careful. You have to really focus on who those select winners will be. So that's going to be the most important part of this.
We love a call back to the intro. I have another question for you, because some investors think, well, if I own an S&P 500 ETF or a NASDAQ ETF, I have lots of exposure to AI growth, but your team doesn't necessarily view the mega cap tech players such as Apple, Google, Meta as the future beneficiaries of growth in AI. So what companies are best positioned to participate in potential exponential growth?
Well, on the surface, you're right. Everyone is thinking Google, NVIDIA, these are going to be the winners in AI. But right now, they make up more than half of the NASDAQ 100. So chances are you already have a lot of exposure to that. And what people aren't realizing is that ChatGPT, for instance, that could be very disruptive for even Google or even Apple. So if you think about, with Google, it's all about search, advertising dollars. So these are very sustainable companies. But if I'm using ChatGPT to actually, now that there's real-time plugins, you can get real-time information. It'll take you into that consumer's website immediately. So there's no need for Google anymore, right? So Google search could be pretty, I don't know about you. I am starting to use Google much less now because I can have a plugin that can get me to the best travel site, wherever, without even needing to spend time on Google, and that's going to hurt them long term.
Ooh, I didn't even think about that. Also, TikTok, big issues with that, right? Every time I'm on TikTok, I can just use that as a search engine. They're ruining it for everyone. It's okay. It's fine. It might be helping us. Danielle, I haven't forgot about you. I swear. I want to know why investors should be considering using an ETF for exposure in growth in the AI space.
Well, Ren kind of hit on it. So investors don't know right now who are going to be the big winners in artificial intelligence 5-10 years down the road. And with an ETF, you get a basket of companies. So you're eliminating that single stock risk and you're diversifying amongst 40, 50 different companies that are all exposed to artificial intelligence. Now, I like to use the internet as an example when we talk about this and eliminating single stock risk. Because 20 years ago, if you were an investor and you made a bet on the internet being the next big growth opportunity, you had it right. You had it right. The internet was the next big growth opportunity. We're all seeing that now 20 years later. But if you were trying to pick a company and pick a stock, that would have been very, very difficult to do. So if actually we look back to the end of 1999, rewind the clocks a little bit, the biggest companies in the world by market cap who were kind of experiencing growth from this internet kind of boom at the time were companies we might not even think about anymore. A company called Lucent Technologies, a company called Intel. We know Intel. Nokia. I think we all remember our Nokia phones. Nokia, I don't even know if they're making phones anymore. We all know the winners in that space was Apple. Microsoft was a winner. They've carried through 20 years later. Fast forward the clock. Who are the winners in the internet space? Facebook, Meta, formerly Facebook, Google, Apple. We know these names. So you can get the trend right, Marissa, but to pick the actual company is a lot more difficult to do. So we find ETFs just a great way for investors to say, hey, I want exposure to something like artificial intelligence, but I'm going to leave it to the professionals to pick the stocks and keep an eye on which companies are really, really, truly exposed to that trend.
I have to say, just shout out Danielle. I trust her implicitly, with this stuff. She was the one that got me on to ETFs in the first place, and I have been singing her praises ever since. So just a little tire pump for Danielle.
Thanks, Marissa.
Anytime. I have one more for you. What is the difference between an active ETF and a passive ETF? And why is this important in consideration when looking at ETFs for AI exposure?
Absolutely. So great question, because a lot of investors who are starting out using ETFs, they think about ETFs as a passive investment structure. So when we say passive, we mean the ETF tracks an index. So something like the S&P 500 that you mentioned or the NASDAQ 100, and that ETF will go out and buy the stocks in that index, and that's it. And we're usually looking at kind of large cap companies that are kind of involved in these major indexes. So that's the passive structure. We think about active management. This was historically kind of kept in the mutual fund world, but now we're bringing it over to the ETF space. And this is where you get a team of analysts and portfolio managers who are trying to pick the best stocks in a specific arena, whether it's in US equities or global equities or what have you. But if we now take it back and look at getting access to artificial intelligence, you have a team of experts who are actively managing a portfolio, researching the companies, understanding, are they investing meaningful dollars in research and development? Are they creating patents? Are they investing in things that are going to be the drivers of future growth? And that's really hard for investors at home to do. And that's why teams like Ren at ARK, they're such specialists in active managing themes like artificial intelligence.
Right. Okay. I'm going to turn it back to you, Ren, actually. It's your turn under the hot seat. Your team at ARK was one of the first in the industry to start looking at companies differently. Instead of looking at sectors, you look at companies exposed directly to an innovation. How has your team analyzing these stocks just looked at them differently than most? And how do you identify value in an AI company? It's got to be tough.
Yes. So we started with structuring our team and our research process much differently than Wall Street, right? So when you're thinking about innovation, you're thinking about 5 years plus. And so if you're thinking about sectors or industries, you need to be focused on technology and how these technologies are going to disrupt those existing industries. There's a number of industries that we can't even think of right now that are going to be built on top of AI. So it's all about structuring our team, and we're hiring analysts that have domain expertise in the underlying technologies that we're researching so that they can understand technology, how that's coming in and affecting that sector, and then look for those companies that are best positioned to be either the key enabler or the beneficiary of these new technologies. And when we're looking at AI specifically, there's three things we're looking for. We want to find companies that have visionary leaders. They have a great management team in place that are thinking that 5 years out or more in some cases. They have distribution, TikTok. How did that go viral? I mean, you have that distribution. You can push it out there. And that is the key to that is data, right? The more distribution you have, that network effect, the more data you can collect. And then the third is the quality of that data, right? So if you're collecting all that data and you have a superior product, you can build on top of that, then you can distribute it out. That's what sets you so apart in the AI world.
Well, one of your highest conviction names in the AI software space is a company called Twilio. So can you tell us why this company was so exciting to you?
Yes. So you use Uber?
I do.
So you know how you're messaging your Uber driver? I'm right here, but you can't find me. All that is happening on the Twilio network. So they are using basically, there's trillion transactions almost, in their entire database, 1 billion or so per day. And that data is, you're collecting information on they have clients, pretty much most of the Fortune 500 companies. So they're collecting data on all of these companies. And so with that data, you can essentially provide better services and products that they can then sell. So that's a pretty big opportunity. And the big thing about Twilio is no one's really paying attention to that because they're all focused on NVIDIA. That's the AI name. But this is AI software that we think is an even bigger opportunity. And it's trading at a fraction of the price to sales ratio as something like NVIDIA. So flying under the radar, but could be a very big opportunity in the next few years.
One company that's definitely not flying under the radar in any way is Tesla. And that is one of ARK's highest conviction holdings. So your team doesn't necessarily view Tesla as an auto company, but they view them as an AI company, right? Or software company. Why is this?
That's correct. So we have 3 analysts covering that stock, right? So typically Wall Street looks at it as an automotive company. It's so far from that, right? Yes, they may be producing automobiles, but we think longer term, they could be running a robo-taxi network. That is built on AI. So we have an energy storage battery technology analyst. These are EVs, right? So electrical engineering. This is not mechanical engineering. We have a autonomous mobility analyst covering it from the robo-taxi network. And then we have an AI hardware and software analyst covering it from that perspective because they have their own full self-driving chip, which is collecting all the data. So if you think about the data that they're collecting on the road, so there's several million Teslas on the road, they're collecting billions of miles. And when you look at Waymo, Google Waymo, or even Cruise Automation that are working on autonomous vehicles, they're collecting their entire database. Tesla collects in a single day. So from an AI, I mentioned quality of data and the amount of data is going to be key here. So Tesla has the most data on real world driving.
Dang, that's a tongue twister.
Yeah.
Real world driving. Okay, say that 10 times fast. You can't.
So they have the most miles out there, and we think that's going to put them ahead. And so it transforms Tesla from a one-time vehicle sale, low margin business to a reoccurring software as a service business with high margins.
You know what, Renato, I like you a lot, okay? You got a lot going on in that brain. I need to know how Canadian investors can access ARK Investment. How do we do this, Danielle?
Yeah, well, it's really exciting. So ARK and BMO ETFs have collaborated to bring ARK's ETF and their strategies up here to Canadian investors. And this is really important to note because a lot of Canadian investors sometimes buy ETFs that are listed in the US, but it's not always the best investment experience for a Canadian investor to do that. You're buying a US domiciled asset. So as a Canadian, it's not a Canadian asset. And they're usually trading in US dollars. So you have to kind of navigate currency exchange there when you're buying and selling. So kind of to streamline this approach for Canadian investors, BMO ETFs has listed 3 of ARK's ETFs up here in Canada. The same ticker names, ARKK, ARKW, and ARKG. But these are accessible to Canadians. They trade in Canadian dollars, and it's a Canadian domiciled asset. So just a better investor experience for a Canadian.
So where do these strategies belong in a portfolio?
Yeah, so this is growth investing. I would say at its finest, because we're really looking at companies like for example, Twilio at Renset is trading really under the radar. We're looking for companies that have opportunity to really have exponential growth, which is exciting for investors, right? Because everybody wants to grow their portfolio as much as possible. But sometimes investors don't think about the other side of the equation when managing a portfolio. And that's you're also managing risk as well. Right. So big reminder, when you are investing in AI companies, these tend to be small, mid-cap companies. There's going to be more volatility. And as Ren's team work through which companies are going to be the best winners and losers, there might be a couple losers in there, and those will be taken out of the portfolio, and new winners will be added as you analyze. But I think the point really to make is there is going to be some volatility in this type of portfolio. So we really call it out for a part of a growth sleeve within a broader, more diversified portfolio to really juice up the growth side of the portfolio. And again, the time horizon on these, as Ren mentioned, you're looking at 5-10 years down the road, and sometimes even longer. If we look back to the internet boom, it took about 10-15 years for the maturation of those companies to really hit the market, and those types of companies to get to that $1 trillion market cap. So something to set in your portfolio and not expect it to shoot to the moon in a year, but keep it in a growth sleeve, and remember there is a time horizon on that 5-10 years. And be patient with it.
I love that you're saying remember, but I love to set and forget with my ETFs. Just put them aside and let them have some fun.
And that's the best mandate. And let Ren's team manage the portfolio for you, and just set it and forget it.
Love this for us. As a reminder to investors watching at home, those ARK ETFs are listed right here in Canada by BMO ETFs. They're listed in Canadian dollars on the Canadian exchange, which creates a better investment experience for Canadians. To find out more, visit arkinvest.com or bmo.com/ETFs. Danielle and Renato, this has been a pleasure. So much fun. Thank you so much for your time and your insights.
Thanks. Great to be here. It was a great conversation.
I agree. This was fun. Let's do it again. Thanks for joining us.